If the United States were to not increase the debt ceiling, that would hit everything. And while that's going on, everything is remarkably fluid and very angry. If you do want to take de-dollarization seriously in the future, and that it's weaponized the US dollar in a few ways, finance currency, it's the primary currency in everyone's foreign reserves. It's the primary trade currency. It's the primary store of value. The only country that, in my opinion, is doing anything meaningful when it comes to moving from the dollar to something else is Saudi Arabia.
Hello and welcome to Crypto Street. In this video, we will delve into important topics such as the debt ceiling issue and the truth about de-dollarization, presented by Peter Zeihan. Additionally, we will provide you with the latest update on Bitcoin. So, let's get started and explore these fascinating subjects together.
Since the United States runs a significant budget deficit that requires approval from Congress to raise the funds that are necessary to run the government. Now, if the United States were to not increase the debt ceiling, that would mean that the United States would no longer be able to raise capital in order to fund government activities. And that would hit everything, whether it's Social Security or Medicare or Medicaid or the military or the food stamp programs. Basically, the government would have to triage and decide what not to spend money on and actually live within its means. But I'm of the belief that we're going through a political transition that we go through every generation or two. And when that happens, the factions that make up the parties move around. They jump ship, and maybe they become swing voters, maybe they switch sides. And while that's going on, everything is remarkably fluid and very angry, and social media certainly hasn't helped. The stage that we're at the moment is that Donald Trump succeeded in excising the fiscal and the business communities from the Republican coalition, but he's also succeeded in bringing the unions into the Republican Party from the Democratic coalition. And Joe Biden, now that he's president, has been at least partially successful at breaking up the unions and the Republicans and trying to get the unions back. And what this means is that the unions, the fiscals, and the business conservatives are all in flux and all are basically swing voters. Now, those are the three factions that know how to do math, for which economics is the core part of why they're involved in politics. And so when you've got the three factions that know the most about things like math and finances and budgeting no longer part of the political core, everyone else who's willing to use the debt ceiling as a political wedge can go a lot farther because there's no longer a group of sane people in the background saying, no, we're not going to do that. We're going to try something else. We're seeing something similar with the Greens. Because we don't have unions, fiscals, or business voters represented in Washington at really any level, the Greens are able to impress their view of economics on a lot of policies. And so we're getting a few things that maybe don't hold up to normal fiscal rules. I still don't think we're going to be facing a default. Still think we're going to have a last-minute compromise. Joe Biden has canceled part of his Asia trip in order to come back and hammer out a last-minute deal. But this is probably going to go down to the wire. And that's simply because our political system is too much in flux. So hopefully that brings a little bit of context, a little bit of detail into what has become an unnecessarily problematic development. And I hope cooler heads will prevail in the long run.
Meanwhile, Bitcoin decides that bad news is not bad enough as upside volatility accompanies proof that U.S. inflation remains sticky. Kobasi noted that expectations for interest rate hikes from the Federal Reserve were shifting rapidly thanks to the PCE event. In a separate development, traders found some relief in recent news concerning the Biden administration's progress in reaching a deal on the debt ceiling. With the deadline looming just days away, the potential resolution has injected optimism into the market. As a result, the prices of United States equities have been given a boost. The positive impact of this news is evident in the performance of key indices. At the time of watching, the S&P 500 and Nasdaq Composite Index have both seen notable gains of 1% and 1.65% respectively. This upward movement reflects the growing confidence and renewed investor sentiment in the market.
Let me give you the three things to look for if you do want to take de-dollarization seriously in the future. This is not the time. Number one, size. For a currency to be a currency of exchange, a currency of trade, and especially a currency of reserve, it has to exist in huge volume because it has to lubricate trillions of dollars of financial transactions and physical transactions every single day, and something in excess of $25–30 trillion of annual merchandise trade. That's a lot. And there are really only four currencies in the world that can even theoretically do that: the US dollar, the European euro, the Japanese yen, and the Chinese yuan. Okay, number one. Number two, access. You have to be able to get a hold of nearly unlimited volumes of that currency whenever you want to. Obviously, the dollar scratches that itch. The Japanese yen, not so much. The Japanese tried to go global back in the 1980s. It turns out their financial system couldn't handle it, and it was one of the many factors as to why they have had, on average, 0% growth since 1993, 1994, something like that. And so they have kind of closed up shop. Their currency is available. You can add it to the side, but it's never going to be a mainline exchange currency. Every once in a while, the Chinese will do what they're doing now and talk up the yuan and talk up internationalization. Then as soon as it starts to happen, a flood of currency from the Chinese goes elsewhere because the Chinese are the people who are the least confident in their own economic system. And then the Chinese government slams it shut, and we don't hear about it for a couple years again, like we are now. Okay, what's the big one? Trust. You have to trust that the currency is going to be worth something. You have to trust that the government's not going to intervene. And that means this is kind of a subset of trade. Now, with trade, if you are a major trading country and a large percentage of your GDP is gotten from exports and imports, then you have a vested interest in what the value of your currency is every single day. The U.S. is perfect for that because the U.S. Trade to GDP ratio is only about 15%. And about half of that is either energy or NAFTA, and everything else falls into that other like 6-7%. So the United States really doesn't care what happens to the value of the currency every day. The Chinese don't have a freely traded system, so they can micromanage what the value is every single day. There's also the issue of whether your money's going to be there the next day. Now, the United States maybe has taken a hit on this with the Russia sanctions, and that it's weaponized the US dollar in a few ways, but compare that to, say, what goes on with monetization. Now, I know a lot of you folks out there who are like gold bugs are like, oh, the U.S. monetizes like mad. And, there's something to be said for that.
Bitcoin price analysis shows that Bitcoin remains pinned below $27,000, with recent weakness increasing calls for a potential fall to the low $20,000 level. However, the bulls are expected to put up a fight to defend the $25,000 support. On May 25th, Bitcoin bounced off $25,871, which is near the strong support zone ranging from $25,811 to $25,250. The bulls will attempt to push the price toward the 20-day exponential moving average, EMA, of $27,173. If achieved, this could present a headwind for risk assets, including cryptocurrencies, indicating persistent inflation and the possibility of further fiscal tightening measures.
We do have a large money supply. It's probably bigger than it needs to be, but a couple things to keep in mind. It's been shrinking for the last year as all the stimulus efforts from the last 15 years because of COVID and the financial crisis and everything else have finally wound down. It's going in the right direction. And second, I compare it to everyone else. The Japanese, the Europeans, and especially the Chinese print currency in far greater volumes than the U.S. does. So the U.S. currency is the primary finance currency. It's the primary currency in everyone's foreign reserves. It's the primary trade currency. It's the primary store of value. The Chinese yuan is none of those things. In fact, 99% of the issued currency of the Chinese yuan is held within the Chinese system, but their money supply is bigger than the United States because they print currency so ridiculously. So if you want to use that as a reason to talk down the dollar, that's fine. Just make sure you apply the same criteria to everyone else. Because the yen in the U.S., even though the Japanese economy is less than a third of the size of the U.S., it's about the same currency exchange, and the euro is bigger too. So the U.S. runs the least bad ship, if that's the right way to look at it. And then finally, of course, there's the euro. The Europeans for a long time have been mooting the U.S. dollar as a co-equal currency, if you will. The European euro should be right there with them. But they confiscated insured bank deposits back when they had their financial crisis in the late 2000s, early 2010s. And as a result, anyone who could move their money out of Europe did. So it's a regional currency, and that's not nothing, but it's no longer a serious contender for any sort of broad, dominant international role. All that said, there is one country out there that is seriously considering and maybe even implementing a degree of de-dollarization because it doesn't care about these factors. It has something else that is driving its decision-making. The only country that, in my opinion, is doing anything meaningful when it comes to moving from the dollar to something else is Saudi Arabia. Now, Saudi is the world's largest oil exporter, and they have started to accept payment from a number of Chinese government entities in yuan. But still, this is the only example I'm seeing out there of a meaningful shift away from the dollar, and it's only for trade with one country for one commodity.
Thank you for watching. We'd like to hear from you. Is it a good time to invest in cryptocurrency? Let us know your thoughts in the comments below.